Hello, everyone. Welcome to the home of crypto. Today, topics for discussions are Bitcoin. Will it hit 500K to a million? Is dollar dominance at risk? Bank failures and how it benefits Bitcoin. We'll do some technical analysis and then I'll leave you off with my final thoughts. This is basically a video that I had promised earlier to kind of explain my thesis or my logic behind why I think Bitcoin will win in a long term. Okay, without further ado, let's get into it. The two major reasons that the dollar will be replaced with Bitcoin as the world de facto reserve currency is one, the dramatic shift in geopolitical landscape with the election of Donald Trump, and two, the set of macroeconomic chain reactions that further exacerbates the collapse of dollar over the next few years to come. You can't understand the place of Bitcoin in the world in a vacuum or see the potential in this asset without understanding these two main reasons. Throughout the presentation, I'll do my best to lay out the effects of these two reasons on the collapse of dollar and how it supports my thesis of Bitcoin going a lot higher over the next few years. So, without getting political, because I don't really believe in any political parties, because they all are in it for the money, and that seems to be their primary motivating factor. If you notice, ever since the election of Donald Trump, the norm and the respect for the office of the United States went out the window because he started to attack allies, like asking G7 to pay more and making fun of them and doing everything possible to get out of Afghanistan without considering or talking or talking to allies or making sure that everyone was on the same page, uh, or questioning longstanding alliances that were in place for decades. Now, in the face value, it seems like he was doing the right thing and making everybody pay a fair share or ending a war. But that signal to friends and allies the US has lost the moral high ground and leadership characteristics that were in place for a long time. Paying more for NATO is a small price to pay to guarantee dollar dominance or take the fight to Taliban to signal strength, not weakness to China or other foes. And at the meantime, signaling friends that when things get tough, you can still count on the United States to be there. And the minute the quality of US foreign policy was questioned, we lost the war. It seems at that moment that we secured small victories, but we gave rise to ultranationalist movements around the world that brought us Bolsonaro, that brought us Boris Johnson of UK, that further secured the place for Xi and Putin of Russia, not to mention starting trade wars. And all of a sudden, there was no more US leadership, and it was every man for themselves. So the common themes for that era was world order at risk, ultranationalism, total chaos, long-standing alliances that were in question, there were trade wars, there was no leadership. And more nationalist policies were prevailing, which meant lower trade. What does that do? That definitely affects the how U.S. is seen, how U.S. Leadership is seen, and how dollar dominance is seen around the world and influenced. So, what those policies do, what actually resulted in, was in countries running around and forming new alliances around the world to run from a place of chaos to a body of order and agreements, which further strengthened the BRICS. So, for those of you who don't know what BRICS stand for, it's a body of countries like Brazil, Russia, India, China, and South Africa. And there are rumors that there are more nations lining up to join that coalition. So, for example, in recent address to BRICS Business Forum, Russian President Vladimir Putin stated that uh, minilateral members, states were working to develop a new global reserve currency. What does that mean? That means a flight away from dollar. So recently, China and Brazil, largest trading partners, is it beneficial for both countries to use local currencies for bilateral agreements and sidelining basically dollar. So all these policies that Trump brought on are producing these type of results, which further risks the dominance of dollar. So, and To give you a further an understanding or breakdown of BRICS in comparison to the G7 side by side, basically, it puts things in perspective. It seems like that BRICS is going to further expand, which means that it will account for a greater part of the world GDP, meaning that they will have a greater say when it comes to world affairs, when it comes to dollar dominance, and the place of dollar as a reserve currency. So the BRICS also expanding to, for example, Bangladesh, Egypt, UAE have all joined the BRICS. Now, new development rumors are that countries like Iran and countries like Saudi Arabia, they're also lining up. The BRICS now contribute to 31% of the global GDP, while the G7 has fallen to 30%. The BRICS expected to contribute over 50% of the global GDP by 2030, with proposed enlargements almost certainly bringing that forward. So basically, the population comparison, the account for the global area, and it just gives you a general idea of where that leadership of the world is shifting and how that will affect the reserve currency of the world, which is dollar. So now the one of the even more interesting scenario in this whole thing is that members of G7 and Saudi, which we have a long-standing alliances, are currently being questioned. What do I mean by that? So China and France companies complete the first cross-border yuan settlement of LNG trade. So they basically agreed to trade natural gas using their own currencies in yuan, not the dollar. What I mean by that, yet it's basically another ally doing business with China and ditching dollar, which is more like tit for tat when it comes to France, in my opinion. We can later discuss that in a different slide. But what's even more interesting is what Saudi Arabia is doing. We have a very long-standing agreement with Saudi Arabia after the petrodollar agreement. And for those of you who don't know what that petrodollar agreement was, so basically a quick history lesson that in 1974, when the embargo was lifted, the US saw basically an opportunity in oil and made a secret deal with Saudi Arabia, which later came to be known as the petrodollar agreement, in which the Saudis agreed to sell oil in the international markets using dollar only. And in return, the US offers them protection and promises to sell them weapons, which forced all the countries around the world to hold dollars in reserve currency if they were to trade oil, hence dollar stability and dominance. Now, petrodollar was not the only main dominance factor because there were factors or currently factors that like also helping secure dollar as the dominance currency of the world or being considered as the world reserve currency, which is like our tech hubs. Petrodollar was one of the agreement, U.S. leadership and military, and the trade agreements that we had in place. So all these things working in combine was basically helping secure the place of dollar around the world. So to see these kind of things happening is just basically another big shoe to drop. And so, you know how we talked earlier about France. So, going back to France, the reason that France pulled that move is that when Biden got elected, it actually made things a little bit worse. Or as Trump calls him, Sleepy Joe got elected. He further alienated some of the allies that were on our side, basically like France, by undercutting France and having Australia choose US and UK to replace the deal that they had in place with France. So basically, France had a deal in place with Australia that they were supposed to build them nuclear submarines, and that deal was worth, uh, I think, like $66 billion. So Australia basically bailed on a submarine contract with France worth around $66 billion last week, choosing instead to work with the United States and UK. Outrage France that recall its ambassador to the US and Australia. So now, if it's just only geopolitical issues, you could kind of shrug it off and say, okay, that's speculation. And with time, or perhaps a change of more competent leadership, things might change. But when you see it not only as the geopolitical issues, but it also develops into a crisis of economics. What I mean by that crisis of bank failures. you are kind of um, if you're kind of creating an environment that sort of help or speed up the collapse of dollar. Now, if you weren't sleeping in Iraq for the past few weeks, I'm sure you've heard of some bank failure collapses, right? So one thing that I kind of wanted to sort of highlight in comparison, because we all have memory of the 2008 financial collapse, right? So just the two banks alone in the United States, just the two banks alone, their collapse or their total assets that were, basically lost, the Federal Reserve had to come in and basically buy it, is that they account for 92% of all the bank failures in 2008. That's a big chunk, except the Washington Mutual was like approximately $307 billion. Now, this does not include the banks that have failed in other world, like in other parts of the world, because Credit Suisse and other small banks in Europe that are failing, not to mention the collapse of real estate banks in China. Now, one would assume that since the turmoil is taking place, sure, the riskiest or the newest asset on the block, which is Bitcoin, will be facing the same fate, right? Because let's call it what it is. Bitcoin is the newest, riskiest asset on the financial markets. So let's take a look at what CNBC just did. They just released this article basically saying that Bitcoin briefly tops $28,000 for the first time in 9 months after bank crisis that sparked the weekend rally. So it's basically, it just tells you where that money is flowing. And money is flowing from banks and all these other riskiest assets to a place where it could potentially be a de facto world reserve currency, because it does not belong to any specific country. So there doesn't have to be a military to defend it. You don't have to have sort of a trust in place to be able to transact in Bitcoin, and it does not belong to any specific country. Now, Bitcoin is up 50% in 2023, beating major commodities and stock index. What does that tell you? Let's take a look at some of the technicals to kind of see where things might be hitting next. So this is a weekly chart of Bitcoin. We had this long trend in place where we kept running into constant resistance, and it kept pushing back every single time. But if you've noticed, recently we have broken out of that resistance to the upside. That was right around December time. And what it has done basically is go sideways, move up, consolidate sideways, move up, consolidate sideways, and move up. We're running into that resistance right around that 28,500 to that 32,000 area. We have this little box of resistance that we're running into right now. So what's most likely going to happen is that, so there's two possible scenarios, right? We're going to go up in the area, get rejected, and we're going to test that 24,900, 25,000 area support, number one, and most likely bounce off of that. And the worst case scenario is that that could potentially fail, and then we're back down to our support number two, which is right around there, 15,000 to 15,500. So the reason I think that Bitcoin is actually hitting a lot higher is that if you notice that U.S. markets generally, they work in a cyclical cycle, right? So I'll go into a further slide to kind of explain what I mean by that. We usually go through these cycles where there's like disbelief, hope, and recovery, their optimism, and then we get this huge rally that we basically top out at euphoria. And then we kind of come down. There's a little bit of complacency. We go back up, and they're like, okay, everything is fine. And then it starts to keep going down. That leads to anxiety, denial. And then we have this little wick of panic selling that ultimately it's like it leads to anger and depression, and then slowly we grind back up, right? So what I have done here is try to overlay the chart of Bitcoin that we just discussed over that psychological crypto market cycle, which is identical to like the stock market cycle. And I don't know if you guys could really see, but It's kind of hard to overlay the whole thing. But as you can see, we're kind of actually exactly tracking that cycle, tit for tat. And we are running into that little area as expected to have a little bit of a consolidation and sideways action. And I think we are going to have a little bit of consolidation and experience a little bit of sideways action because we have ran up more than 50% from the bottom, or approximately 50% from the bottom. And what it has also done is that there's a certainty of this whole recession talk and Federal Reserve raising the interest rate. So it's expected that it's going to take a little bit of breather sideways and then probably move up. So it's good and it's healthy to kind of have this whole action of moving up, consolidating sideways, finding more buyers, and then pushing higher. So these are basically just my technical analysis and fundamental analysis as to why I think we have already bottomed and most likely we're going to have this little consolidation, sideways reaction, or testing that support before we move up. So, as for my final thoughts, some of the tailwinds for Bitcoin are the petrodollar agreement collapse, U.S. banking systems at risk, the fear of depression and recession, U.S. leadership being questioned, and the countries of BRICS that are currently on the rise are all some of the tailwinds that will push the reserve currency of the world aside and most likely replace it with something that's already established and trustless, like Bitcoin. We certainly do have some headwinds for Bitcoin. We have the unclear regulatory environment. We have the China and Russia ban. But overall, it seems like Bitcoin is the main beneficiary of the chaos and banking failures rather than being considered as one of the riskiest assets and people staying away. But people seem to be gravitating to Bitcoin. There are some means flight to safety assets that are currently trading, which is it seems like it's Bitcoin, Ethereum, gold, and silver. And the reason that I'm judging these as the safety assets for now is it seems like the cash that's coming out of the system, the current existing system, seems to be flowing into these. And I'm letting the price action of these assets dictate that statement rather than my personal feeling. So I want to thank you all for listening, watching. Please don't forget to share with your friends, like, subscribe. And if you have any questions or comments, go ahead and leave me a comment and I'll definitely do my best to get back to you. Thank you all for your time. Bye bye.